I'm Taylor Riggs, and for Emily Chang, this is Bloomberg Technology. Coming up in the next hour, effectiveness question. AstraZeneca and the University of Oxford's COVID-19 vaccine, it's scrutinized after at least one analyst says the 90% effectiveness label was embellished and only part of a small sample. We have the latest in the race for a vaccine. Plus, consumer spending patterns. No one knows them better than PayPal CEO Dan Schulman. His thoughts on the shift to online payments ahead of the holiday spending season. Plus, working from home, Bitcoin, and more. And demand for electric vehicles. Tesla's surge propels its EV peers. Peers like Rivian, the EV startup backed by Amazon, Ford, and T. Rowe Price. We hear from the CEO. And we have to get back to the markets as the top story. Markets ending the day near the session highs. That notable outperformer, the Russell 2000, those are the smaller cap stocks closing at another record high. This, of course, all on the hopes of that vaccine with the AstraZeneca trial showing some effectiveness against COVID-19. And well, of course, that news that President-elect Joe Biden may nominate former Fed Chair Janet Yellen to be Treasury Secretary. Bloomberg's Abigail Doolittle joins us now. And it really is that record on those small caps, Abigail, that certainly catch my attention.
It definitely does, Taylor. So much news on the day. And, you know, it's another Monday, more positive news around a vaccine. And so that means we have this big cyclical rally. And that brings another record high for those small caps. And as you were pointing out earlier astutely, it's taken a couple of years for these small caps to get another record high. But that's how much stocks like the cyclical bent of this reopening rotation. So on the day, the Russell 2000 hitting an all-time high. The energy index up more than 7%. The bank soaring. However, where we have the weakness, that's tech and Apple actually technically breaking down. It's going to be interesting to see what's there, what happens in the future. Some are saying that the excitement around the iPhone 12 is priced in, and so now the buyers are stepping away. But Taylor, you know, so exciting in the afternoon, the news that President-elect Joe Biden is likely to nominate Janet Yellen, the former Fed chair, for Treasury Secretary. The markets took a move up because there was a moment where the S&P 500 on the day actually dipped ever so slightly. There was some wobbly trading, but Janet Yellen represents certainty. Not only was she the Fed chair, she guided right through the crisis. She was on the Fed during the financial crisis. So investors know her style, that she is one that really favors certainty and messaging her moves very clearly. So she's very market friendly. So on this, we had the S&P 500 climb higher. Not enough, though, to get out of that range. We've been watching this range over the last few months. It's going to be interesting to see what moves this range one way or the other. But markets certainly did respond well to Janet Yellen.
And you're talking about Janet Yellen. And I think the key thing for me, what I kept hearing from analysts is the stability that she provides. Do the markets like the stability? Are they looking for her policies? What do we know about how she may or may not continue this sort of reflation cyclical trend?
Well, you know, I think that what they really like is her messaging. She's very solid in terms of the messages that she delivers. She does not work on chaos. It's very well demonstrated, and she really leads the markets to where they want to go. So this will work well for the cyclical trade. But relative to the cyclical trade, I think that it probably has more to do with the catch-up piece of it, because on the year, of course, we have tech up in a big way, up 31%. On the other hand, the banks are still down 20%. So if investors are going to rush into an area, that is one piece of it. And the same deal for energy. The New York FANG Index up in a huge way in the year, energy down. So that's where money can go. But Janet Yellen's certainty and that stability certainly helps those cyclical stocks for sure.
And waiting on that ever elusive stimulus, Bloomberg's Abigail Doolittle, thank you as always for joining. And as we've been mentioning, another vaccine, it is showing promise in the fight against the coronavirus. The shot developed by the University of Oxford and AstraZeneca prevented a majority of people from getting the disease. It stopped an average of 70% of participants from falling ill. Now that's less than the vaccines from Pfizer and Moderna. However, the effectiveness did rise to 90% for one of two dosing regimens. For more, let's bring in Bloomberg's Robert Langreth. And Robert, it was sort of that the second sentence there that caught my attention, where there's 70%, there's 90%, but neither of that meets that really high bar set by Pfizer and Moderna. Where does AstraZeneca sort of line up in your view?
Yeah, so well, first of all, I mean, the results, overall in the big picture, they are good news because this is like a new technology, different technology than Pfizer and Moderna, and it's also working as a vaccine. So if you take all the results together, it suggests that COVID is not going to be a difficult disease to vaccinate against, and a lot of different vaccine technologies are likely to work. So in that sense, it's very good news. But in terms of the actual results themselves, they're kind of confusing. You had one dose, the main full dose they tested, that was only 62% effective, but then they had this second dose they tested. They actually lowered the dose for the first of two shots in a small, and they only tested that one in a smaller number of patients, but then they said that one was 90% effective. So, and how would you do a lower dose, and why the lower dose get so much more why would a lower dose be so much more effective? It's not what you'd expect. So that they didn't have a good, explanation of that. Or some people are talking about the scientific reasons. So basically, there was some skeptical reaction to that because and what did that mean? And the fact that the big trial going on in the U.S. of this same vaccine may have to, it's not as far along, and may have to adapt the trial to test this new lower dose that may be more effective. But people, it generated a lot of confusion. People kind of quite, weren't sure, what to think or which number to believe. So, and in a wealthy country that has access to more effective vaccines, this might get used less if the lower numbers turn out to be the right ones.
So let's talk about the first point that you hit there. Besides some of that skepticism, we spoke with the analyst just a few hours ago from SVB Leerink, who really raised the confusion about that trial. Maybe it was inflated, and he wasn't sure if the U.S. would even legalize this vaccine or even have it in the U.S. The company responding and saying, look, we'll release the full data and the full analysis in a few days. What do you need to see from that full data to help squash some of the skepticism we've seen?
Well, there needs to be a clear explanation of why the results are so divergent, so you get a sense of what's the right number for efficacy. Because right now in the U.S. trials, I understand it, which is still ongoing. There's a U.S. trial of this vaccine that's bigger than these trials, and that's been testing this higher dose thing. The one that was shown to be less effective in these trials, and these were trials from Europe and South America and Brazil. So the U.S. trial has been testing the higher of the two-dose regimen. So now they may have to go back and quickly switch the U.S. trial to start also testing this lower dose regimen. So it kind of leaves you in a kind of quandary of what to do. What dose do you give? What's approved? If most people have been tested at this higher dose. So, it's not bad news, but it's kind of confusing news and kind of begs out for more data to resolve it. Is this just a little bit less effective than some of the other vaccines, or is it significantly less effective? And if so, why? And then we need more safety data because this is the one that has a long, safety halt. And that same analyst at SVB was also, wasn't fully reassured about the safety, wanted to hear more about the safety data. I'm sure we'll eventually get that. But, there are more questions, about this one because of the kind of the confusing data set.
You mentioned, as we know, the devil's in the details when it comes to vaccine data and the divergence that we're seeing between rich countries and poor countries. Do we assume that the rich countries get the more effective vaccine? How do you think about distribution and equalizing the playing field?
Yeah, so this vaccine does have advantages in distribution over the mRNA vaccines, or the vaccines from Pfizer and Moderna, and that this can just be basically refrigerated and doesn't have the kind of same freezer requirements that the messenger RNA vaccines require. So this might be an easier one to distribute. So, if they can come up with some dose that's maybe just a little bit less effective than the mRNA vaccines, and that would definitely be an advantage. Now, my understanding is that the UK is going to get a lot of the first doses of this vaccine because, it's developed in the UK, and that's what they signed up for. And I don't know exactly what the rollout is going to be, after that. There's definitely a deal for this vaccine with Warp Speed as well, the U.S. operation. So it's just, it remains uncertain right now as to which vaccines are going to go to which countries and which order. And that's a very complicated set of deals.
And not only which country, but you think in the city versus rural areas. And you brought up that ever important point about, Pfizer and Moderna and the freezing cold temperatures at which they need to be stored. Can we get them to rural counties, even here within the U.S.?
Well, I mean, Pfizer says yes. They claim they've worked out a system. They have these dry ice containers that can be used, and it's going to be shipped to places that have the full freezers in all the different states. And then, from there, I guess it could be put in the dry ice packages that they've designed that can keep it for, I can't remember exactly how long, but a certain period of time. So they say yes, they can do it. But, it is, more difficult and more complicated. So if a vaccine with 95% efficacy comes along that doesn't have those requirements, everyone's going to want to use that one. And we have, more vaccines coming. The next thing to happen will be J&J, probably early next year. That's a potentially one-dose vaccine. That technology is more similar to the AstraZeneca vaccine than the mRNA vaccine. So we'll see what that one does in terms of efficacy. And then there's two more using vaccines that are going into large-scale testing from Sanofi and Novavax that are using even more traditional technology that's looked very good preclinically. So there could be a lot of vaccines out there. It could be a vaccine confusion a few months from now, which one to get, where to go to get it, whether it matters. It could get very confusing if there's 4 or 5 vaccines at work, and we're just parsing out the details of which one works best on which people and which one is safer than the others. It could get very, very confusing.
Well, and like you said, just the technology behind this, the speed at which we've gotten these vaccines years before anyone even thought it was possible. Our thank you, as always, Bloomberg's Robert Langreth, for joining. And coming up, Facebook, well, you remember that $22 billion WhatsApp acquisition back in 2014. We're going to take a look at how the app may just be turning a more lucrative corner. That's next. This is Bloomberg. Messaging might just prove lucrative for Facebook. The social media platform acquired the popular chatting app WhatsApp back in 2014 for about $22 billion. But since then, the messenger hasn't quite generated the returns that they were hoping. However, recent developments do show signs that the company might have plans to monetize the app even further. Joining us now, Rohit Kulkarni, Executive Director at MKM Partners, a buy rating on Facebook, a $330 price target. Great to have you. Talk to us about how you think about WhatsApp, the valuation as it relates to the broader world that is Facebook.
Hey, thanks, Taylor. Thanks for having me. Yes, you exactly put it right. As in, it's been 6 years since Facebook acquired the second largest platform for social media. That's WhatsApp. And today, WhatsApp is still the second largest platform in terms of number of users. There are more than 2 billion monthly active users on WhatsApp. And still, Facebook hasn't yet made significant inroads in making money off of WhatsApp's significantly large user base. But I think we put out a note earlier this week saying we think that Facebook is on the cusp of monetizing users, particularly in India and Brazil, as showcasing how they can make money off of not just advertising, but payments and commerce. There are things that have happened in the last 6 to 9 months, which makes me feel confident that over the next 3 to 4 years, we are going to see accelerating revenues, accelerating monetization from roughly 500 million users that use WhatsApp very regularly in India and Brazil.
I am curious, because you've mentioned India and Brazil. Why have they been able to show progress there? Does that translate into progress here in the U.S.?
As far as India and Brazil is concerned, the key hypothesis there is WhatsApp could be that one super app that is the gateway to entire mobile payments and mobile commerce and mobile advertising ecosystem in those two countries. In U.S., we still don't have that concept of a super app where we use Amazon for shopping, Google for search, YouTube for something, and so on and so forth. But in outside of U.S., outside of Western countries, say in China or in India, there are these notions where there is one gateway app. In China, there are maybe 2 or maybe 3 apps that most of the people use to find other services, other products. In India and Brazil, WhatsApp is trying to be that super app, probably at a number 2 or maybe a number 3 position that unlocks many more ways for the company to make money. For example, in India, they just got a license to be a payment provider to all the users on the system. That's a very significant development. In Brazil, they have received the license, but again, there have been some false starts there. But we are closely monitoring that development in Brazil. So that said, beyond advertising, the market is huge, and I think WhatsApp is ready to monetize that.
How stiff, though, is that competition? You mentioned some of the behemoths that we're going up against, an Alipay, a WeChat, the big Chinese companies that have already created that, quote, super app. Are they already dominant? How does a WhatsApp start to make inroads?
In India and Brazil, I think we are paying close attention to. There are a couple things. One is Google Pay. Google's payment backbone is used in India. It is probably a number 3 player right now. The number 2 player is a local company called Paytm, and number 1 is a company that is owned by Walmart, and that's called as PhonePe. So there are companies, but there is no Chinese super app, and there is no company that is as large as WhatsApp in terms of users. So having a sticky base of users, in my opinion, is part of an obvious secret sauce that would help WhatsApp win the incumbents in India. In Brazil, it is still open green field. There is no WeChat or Alipay there. Neither are there any local incumbents, which makes it probably easier for WhatsApp to win that market over the longer term. And again, we are talking about one. We are thinking over the next 5 years. This is a company that was destined for many things, and probably after 6 years of investing, now is the time for Facebook to harvest WhatsApp over the next 5 years.
Stickiness of users. Rohit Kulkarni of MKM Partners, so great to have you. Always wish we had more time. Thank you so much. And coming up, the SPAC space continues to heat up ahead of the holidays. We're taking a look at one cloud company, why they're foregoing the traditional IPO. This is Bloomberg.
You're going to see a flood of IPOs between Thanksgiving and Christmas. Watch how those are received. And if those are received well, that bodes extremely well for 2021. This is going to be a very busy time post-Thanksgiving through Christmas.
Going public via SPAC or merger remains a popular choice, as evident by AvePoint, which is making its debut. The company is one of the largest Microsoft 365 development teams outside Microsoft itself. For more on the SPAC choice, let's welcome AvePoint CEO TJ. On that note, why a SPAC versus a traditional IPO?
So thank you for having us here. On SPAC side, we actually 2 main reasons. We actually looked at the traditional IPO as well as the SPAC. We, as the largest SaaS data management provider for Microsoft 365, and AvePoint has been servicing enterprise customers for the last 19 years and Microsoft SaaS for the last 9 years. So we actually look at both routes. And when we met Jeff Epstein of ex-Oracle CFO, as well as Brad Koenig of ex-Goldman Capital Markets Technology Desk, we actually really resonated with them. We feel that their operational knowledge and their capital markets knowledge were able to help us scale our next phase of evolution here. So that's one. And second, in the SPAC world, everything is much more intense, much quicker. So this allows our team to then go back and focus on growing our business, which is a fantastic total addressable market with 250 million active users. That's Office 365 user base today, growing to 500. So we have 7 million, and there's much market to go get. So we're very, very excited about the next phase of evolution here.
Yeah, on that note about the business, do you ever worry about customer concentration and not being diversified enough?
We have been a Microsoft partner and what Microsoft called independent software vendor for the last 19 years and focused on Microsoft Cloud for the last 9 years. So it's the largest enterprise cloud today with Microsoft 365. And we do follow our customers. By definition, many of our enterprise customers, which is 250 million and above annual revenue companies, are multi-cloud. So they could have Microsoft Office 365 for their office collaboration, but they may also have AWS for compute, Salesforce for CRM, Box and Dropbox for cloud storage. We actually support our customers and we follow our customers. So we actually today already support some of our customers around their cloud backup, around Salesforce, around data management, record management on Box and Dropbox, as well as even supporting AWS and Google around compliance and data tagging and classification.
Pushing down into some of the financials, you generated $148 million in total revenue for the year. That's 26% growth year over year. Can we expect those kinds of double-digit growth numbers in the next 5 years?
Absolutely. So it's very rare to find a 19-year-old software company that's now at the most exciting part of their journey. We remade the company. We actually did the cloud transformation back in 2011 and subscription conversion back in 2014. And now out of the subscription conversion, starting 2019, we have high growth, predictable growth. So this is our second straight year of nearly 30% ARR growth. And revenue-wise, we're looking at 30% year-over-year growth as well. What's really unique about us is that we're a SaaS high growth company that's also cash positive, EBIT margin positive. So we're well north of that rule of 40 as a key performance metric for enterprise SaaS companies. Part of the great part of the SaaS company as well as subscription business model is the predictability of our business. Going to every year, over 70% of revenue is already spoken for. So yes, we're absolutely confident in going to grab major market share in this large Microsoft 365 market with continued high growth.
TJ, we just have about a minute left. You're unique in that you have some real insight into customer behavior, IT, tech spend at this moment. How is tech spend?
Tech spend with COVID, remote everything world, there's massive acceleration towards cloud. So Microsoft CEO Satya Nadella famously said, digital transformation journey, what usually takes company 2 years, is now compressed in a matter of weeks. We see this as well. Now, surveys of CIOs of major Fortune 500 companies, of which we have 25%, also tells us that even after the pandemic with vaccine along the way here, the movement to cloud, the massive migration of data on cloud is there. So now customers are looking at leveraging our solution to help them better govern, manage, and geofence all this data in cloud to actually innovate and collaborate faster.
TJ, AvePoint CEO and co-founder, thank you as always for joining. And coming up, will consumers spend or save this holiday season as, of course, the pandemic-battered economy continues to affect people's budgets? We are going to hear it firsthand from PayPal CEO Dan Schulman. He shares his predictions. All of that next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Taylor Riggs in New York, in for Emily Chang. As we head into the holiday season, renewed surges of COVID-19 cases around the world threaten to impact consumer spending. In a recent interview, PayPal CEO sat down with Bloomberg's Emily Chang to discuss how a pandemic-driven shift to digital payments and e-commerce has transformed consumer behaviors and whether it will affect the end of the year's shopping trends.
I don't think it's an exaggeration to say that the pandemic accelerated the shift to digital by 3 to 5 years in 3 to 6 months. It's not even hyperbole, it's just the math of what we're seeing. So you are seeing a huge shift from physical to digital. And it's not even just that shift from physical to digital, but even in store has gone more digital. So you're seeing a blurring between online and offline. Obviously, more and more people are shopping online, but now even when they're going into the store, they don't want to touch cash anymore. So they want to either do contactless cards or QR codes. And the other thing that you're seeing is that 40 to 70% of consumers don't want to touch cash anymore. So you're really seeing a decline in the usage of cash, which is why you're seeing an explosion in digital payments.
Could this lead to the disappearance of cash, would you say?
Well, I think a lot of people have predicted the demise of cash and have been wrong over the years, but there's no question that the use of cash and the prevalence of cash in transactions is dropping somewhat precipitously. And whatever that trend rate was, it's now a much more accelerated trend.
So what are you expecting to see then as we head into the holiday season?
Yeah, well, I think there are a couple of different things that we're going to see. First of all, you've got over 50% of the population that is concerned for their health about going into physical stores. By the way, that was a survey we did pre all of the explosion of the pandemic here in the States. So that's probably a much higher number. So people are going to move their spending online. And if you look at 18 to 55-year-olds, about 75 to 80% of them, so it's a huge proportion, say they are going to do substantially all or at least half of their shopping online. So you're going to see a dramatic increase from people shopping in store to shopping online. You're also, I think, going to see more of a spread of the holiday spending. You know, before it was very peaked during the Cyber 5 from Black Friday to Cyber Monday. That's going to be, I think, elongated because the logistics of distribution are such that retailers are trying to spread that as opposed to have it peaked. And the final thing that we're seeing now, which I think is really encouraging, is 2/3 of Americans want to shop at small businesses. And that's really encouraging because small businesses have really suffered during the pandemic. And I think a really interesting fact, Emily, that I love seeing is that as small businesses have moved digital, the sales that they're seeing have gone dramatically outside of their local market. So when somebody puts in PayPal for a small business, 75% of their sales are outside of their home state. That's a pretty remarkable occurrence. So small businesses are dramatically increasing their addressable market.
So what is all of this telling you about the health of the American consumer? Obviously, we have been in a recession. A lot of people have lost their jobs, and yet there's also this increase in activity online.
Yeah. Well, I think we're clearly seeing more Americans than ever before worried about the state of their financials. You know, the pandemic, in my view, just exposed more evidently the trends that you had almost 2/3 of Americans struggling to make ends meet at the end of the month pre the pandemic. So we are living in a time right now where people are really struggling to make ends meet. And this pandemic has only heightened that and brought more attention to it. I do think there are ways that the government has weighed in to try to help. I think we need to do more of that going forward. Certainly businesses like PayPal have weighed in to try and help as well. But we shouldn't underestimate the stress that the American consumer is under.
Now, the pandemic has thrust this conversation about working from home, more flexibility into the spotlight. You're at home, I'm at home. How is this changing how you think about your office footprint, knowing that if a vaccine becomes available, we're still looking at least the middle of next year at the earliest?
I think that's right. From our perspective, you're probably looking at the end of the summer into the fall before the vaccine can really take enough impact if enough people actually do take up the vaccine, which we're hopeful about. But I don't think we're ever going back to what was. I think we'll go into a new normal. And that new normal, based on what we're seeing and as we think about the future of work, is probably going to be some hybrid of people continuing to work from home and coming into the office. Maybe working from home 2 to 3 days a week and in the office, 2 to 3 days a week. Some people will forever be at home, and others will be more in the office, but the vast majority will be some kind of 3-2 hybrid, I think.
That was the first part of our conversation with PayPal CEO Dan Schulman. And up next, Schulman discusses PayPal's embrace of cryptocurrencies amid what he calls a, quote, demise of cash. That's next. This is Bloomberg. Bitcoin has been on a tear lately, crossing 18,000 last week, and it is still keeping up the momentum on Monday. This, of course, after PayPal said in October it will now allow users to buy, sell, and hold cryptocurrencies. Bloomberg's Emily Chang asked PayPal CEO Dan Schulman in a recent interview whether the digital coin is finally going mainstream.
We knew we were going to get high demand because we do market research on this before we introduce any product or service. And we try to work hand in hand with regulators to assure that anything that we put into the market around cryptocurrencies was safe and secure and easily understandable by our consumers. But, the demand has been overwhelming for it. We had somewhere between 2 and 3 times what we expected on our waiting list. I think the really interesting thing that we talked about is not just being able to buy, hold, or sell cryptocurrencies, but early next year, we're going to allow those cryptocurrencies to be used as a funding instrument, just like a credit card or a debit card or cash in your account, to be able to purchase at any of our 28 million merchants around the world. And I think that will fundamentally bolster the utility of cryptocurrency, really moving it from kind of an asset class today to more of an ability to use it in everyday transactions.
So how long then do you think before crypto goes mainstream? Or do you see that happening now?
Yeah. So I think there are 2 things that are going on. One, as we talked about before, you're seeing the demise of cash, and you're seeing more and more digital forms of payment and of the forms of digital currencies. There are 2 forms of digital currencies that are very different and distinct from each other. The first are cryptocurrencies. They're not backed by a fiat, government currency, but as we can put more and more utility around those and take advantage of some of the modern technology around that, I think working hand in hand with regulators, we can increase some of the utility of payments and transactions. The other is central bank issued digital currencies, CBDCs, as they're called. And I think, based on my conversation with regulators and presidents of central banks around the world, that that's no longer a matter of if, it's a matter of when and how they begin to issue CBDCs. And they're exploring that very seriously. There are some trials underway. But I do think the intersection of digital currencies and digital wallets like PayPal and Venmo are a natural.
Bitcoin has been on a bit of a bull run, in part because of the PayPal news. I wonder what you see the biggest risks being. Obviously, there's government acceptance and regulation, which we discussed. What about security? What are the things that could prevent cryptocurrency from getting to the point of being truly mainstream?
Well, I think there's some base foundational elements for any type of digital currency or payment financial instrument to gain mainstream acceptance. One, there needs to be trust. I mean, that really is the foundation of the entire monetary system. Trust in the value of that underlying asset and currency, and that trust comes from security, which is incredibly important and paramount. It comes from regulatory oversight to be sure that it is used for the appropriate purposes and not used by cyber criminals, et cetera. And finally, that your privacy as an individual is respected. And I think those are 3 crucial things. And I think it's one of the reasons why we introduced cryptocurrency the way we did, hand in hand with regulators, putting it onto the PayPal platform so that we could assure that security, that trust, and that we could work again hand in hand with regulators.
A lot more services are adding the buy now, pay later option. There's Afterpay, there's Klarna. PayPal is now adding this to its wallets. Does this at all concern you that it means more people will spend more than they should right now?
I don't think so, because I think the way that we at least are doing this is that we're assuring that somebody has the wherewithal to go and do these kinds of purchases, just like we do today in any of our credit offerings on PayPal. You know, this is a responsibility we take quite seriously. But one of the things we do, Emily, that's very different than others, is that we use our own proprietary modeling to look at this. Many people look at just FICO scores. We look at a lot of our own modeling, the history that consumers and merchants have, and base credit decisions on that. But I think buy now, pay later gives consumers a ton of flexibility. I love our value proposition on that. We can offer it to merchants without any additional fees and give consumers flexibility to pay in 4 equal interest-free payments, which I think should be helpful for consumers in this holiday shopping time.
So you and I last spoke when PayPal went public and spun off from eBay. It's been a few years since then. Where do you see the innovation coming in payments over the next few years?
There's no question in my mind that as we move into the digital economy, digital wallets are going to evolve substantially. And we are putting a tremendous amount of investment in the past year and next year into transforming both our PayPal and Venmo apps into much more expansive everyday use cases. So they're not just going to be for checkout online, but they will be for checkout online and offline, but they will also include financial services like being able to directly deposit your check onto the platform, savings capabilities, investment capabilities, taking all of the capabilities from our Honey acquisition, shopping tools, like what's your wish list, price monitoring, coupons, deals that can be offered directly to you, and putting all of that capability into our digital wallets, because that's what people want to do right now. They're using it in the digital economy, and our services and products need to expand dramatically to be able to serve our 360 million consumers today in a much more expansive way.
That was PayPal CEO Dan Schulman speaking earlier with Bloomberg's Emily Chang. We have some news that we'd like to bring you as well coming from the UK, but it relates to Huawei, really folds into the technology theme. The UK is said to be weighing a Huawei installation ban in 2021. They're trying to do this to appease some lawmakers. There's been some rebellion within the party, and so this would help appease some of those lawmakers who are looking for a Huawei installation ban in 2021. We do know that lawmakers are set to debate a security bill next week that would really look at stricter rules on how companies can use Huawei 5G gear. So this, of course, further developments coming as they weigh what could be a Huawei installation ban in 2021. And still ahead, electric vehicles, they are taking center stage as more and more people are looking to ditch the fuel pump. We'll take a look at one EV startup focused on off-road and adventure vehicles. That's next. This is Bloomberg. The electric vehicle market is getting recharged today with stocks continuing to surge, some nearing a 300% gain just this month. EV startup Rivian having a tough time meeting demand for its battery electric pickup trucks, warning that it sees supply constraints through 2023. But despite that backlog, the company already has its eye on markets outside the U.S. CEO RJ Scaringe spoke with Bloomberg's Ed Ludlow about the company's strategy.
We have to get the gasoline and combustion-powered vehicles off the roads and replace them with much more efficient electric vehicles that have a pathway to being carbon neutral. Of course, with the grid also cleaning up. So to do that, it means, we need to focus as a company, and I'd say as an industry, on more than just the US. And we see electrification happening very strongly throughout the rest of the world. Certainly we see it in Europe, and certainly we see it throughout Asia. So for us, these are important markets, and these are markets that our product portfolio will go into. And as we launch future versions of our future variants in our portfolio, especially the smaller form factor variants, we see those fitting really nicely into Europe and fitting really nicely into China. So the whole business, the vehicle platforms, and the architectures were set up from the beginning to support sales in across the world, not just the United States, but in Europe, in Asia, and throughout the rest of the world.
Finally, President-elect Biden has some pretty clearly stated policies when it comes to clean energy and also electric vehicles. What do you think a Biden administration would mean for the vision that you just outlined? Do you see a Biden administration putting the United States and perhaps the world on a quicker timeline for electrification?
We talk about this a lot internally. You have, in terms of electrifying the world, you have two sort of sides of it. You have what's happening in the corporate world, meaning what are companies doing and how are they helping to drive that? And then, of course, the products that they create, causing customers to make that switch. And then you have the regulated side. And what can policy, what can tax structures do to help accelerate that? And we're seeing increasingly across the world many major, major markets, countries that have lots and lots of sales, driving targets towards 100% electrification for new vehicle sales. We see that across Europe. We see that across China. So I think that's a very good thing for the world. I think it's a necessary thing to help make this shift faster. And of course, we're watching very closely to see what happens here in the United States. And we hope that the US will be a leader in helping to create and drive policy that makes it easier for consumers to make that switch, and also makes it easier for manufacturers, all of us, to drive towards that future state.
That was Rivian CEO RJ Scaron speaking earlier with our own Bloomberg's Ed Ludlow. He's also joining us now. Ed, really not just Rivian, but that whole EV space just on a tear recently in the stock market. What's going on?
Yeah, today's driver was a note from Wedbush analyst Dan Ives, who raised his bull case price target on Tesla to $1,000. And he's calling this an inflection point for EV demand. He sees EV demand really taking off over the next 18 months to 2 years, hitting 10% of new passenger car sales by around 2025. But what's so interesting, think about the big picture here. You see on your screen there where we are, the blue bars are battery electric vehicle sales. They are a tiny proportion of all the cars sold all around the world. And it's not until 2040 that you see battery electric vehicles becoming 50% of new vehicle sales globally. So we have a long way still to go. That's Bloomberg New Energy Finance data that we're looking at there. But what we're seeing now is some optimism, some enthusiasm, and a change of psychology from investors who are not just looking at Tesla, the market incumbent, the market leader, but looking at these other startups and legacy players like General Motors and Ford, and thinking that this is a good bet to make, that they are making progress on electrification and that they are addressing demand that is out there with new vehicles.
It's interesting when you talk about pickup trucks. We think of them as a higher margin, bigger business, maybe something that differentiates itself from a Tesla. What does an EV pickup truck mean to you?
Yeah, it's really interesting because here in America, there is a clear preference for the pickup truck or bigger vehicles. It's about 80% of vehicle sales in the US. But what's incredible, if you look across the models out there, particularly Tesla, but others like the Nissan Leaf, the Chevy Bolt, great cars, but they're not in line with the types of cars that Americans like to drive and Americans like to buy. And it's always puzzled me why there are not more bigger battery electric vehicles. And now in 2021 onwards, you see the likes of Ford, the likes of General Motors, Rivian, who I spoke to then, bringing electric pickup trucks to market. And if you look at Wall Street notes out there covering this space, you see some of the names there. They think that too will be a driver of consumer demand for these products. I always talk about price parity, but it's also about performance. Can your electric vehicle do the same thing that the gas equivalent that you've owned previously can do? And until that's the case, I don't think we'll see as much EV adoption, particularly here in the US, which has lagged behind other markets like China and Europe in terms of electrification.
Ed, we only have about a minute left. And I think what struck me is earlier you're talking about Dan Ives of Wedbush and the price target upgrade from Tesla. You said $1,000, and it just struck me, this is on the post-stock split Tesla. So pre-stock split, this is a huge call. How do you think about what is really driving these further upgrades that we continue to see?
Yeah, I mean, Tesla may deliver 500,000 vehicles this year. By comparison, Toyota and VW will do 10 million cars apiece, admittedly not electric. I know Morgan Stanley now is looking beyond the vehicle, and they're looking at the kind of margins and top line growth that Tesla could see in software, for example, which is an area where they might lead in terms of robo-taxis and over-the-air updates. We know that other automakers are looking at that space as well. But in the future, there's all these other products that come along with electrification, that come with the increased computing capabilities of these cars. And there's a lot in the valuation that investors are assigning to companies like Tesla that goes just beyond producing cars with four wheels that drive using a battery electric powertrain.
Our thank you as always, Bloomberg's Ed Ludlow. One day you're going to give us more than just Teslas on this program, but I love it. Keep coming back. And make sure to continue to stay with us because it's done with me and it's done with this edition of Bloomberg Technology. I'm Taylor Riggs and Bloomberg Daybreak Asia is coming up next. This is Bloomberg.